Hello and good evening. Welcome to our webinar. This is namely an insight into an MBA class, and today we have a special guest with us tonight, Professor Philip Nell. And I'd like to introduce him. He's actually head of the Competence Center here at the Vienna University of Economics and Business. He's head of the Competence Center for Emerging Markets and CEE, namely. Professor Nell is also the head of the Institute for International Business, and he's the academic director of the MBA in the Bucharest program that we here have at the Vienna University of Economics and Business. So we have a real expert tonight. We're looking forward to your questions, dear audience, and if you have any, please make sure to use the chat box you see on your screen. So I'll hand it over now to Professor Nell for the next 45 minutes and make sure to ask your questions. Thank you. See you soon.
Good. Thank you, Anna. So I hope that you can hear me well. Thanks, Anna, for the introduction. I see a couple of people here in the chat room. There might be some more people joining. Thanks a lot for being with us tonight. As Anna just said, this is a very short introduction lecture just to give you an indication of how some of our MBA courses and classes might run. It's a very specific topic, a very up-to-date topic, obviously, and we do not have that much time, but I try to put in a little bit of interaction, a little bit of reflection also on our side so that we can jointly derive some cool outcomes here. So this, this is the topic slide here, the Corona crisis. This is what I'm focusing on tonight, the Corona crisis and its implications for international strategies, or you could also say global strategies of firms. I would directly jump into some recent quotes from the press, because obviously this has been, the globalization international strategy topic has been discussed a lot also in the media. So you can see, for example, here on the left-hand side, you can see from Forbes newspaper, the quote here: "The post-coronavirus world may be the end of globalization." You see something relatively similar in BBC. Will coronavirus reverse globalization? Or here, this is from The Economist: "Has COVID-19 killed globalization?" Bloomberg up here on the upper right corner is on a very, very different mode here and says the coronavirus won't kill globalization. So there's a hot debate. All the big media outlets are talking about this issue. Obviously, also this issue is discussed within your firms, within your business context. So I thought, let's add a nice little topic here tonight, and let's discuss some of those things. And let me give you some insights also from the academic perspective. Having said that, I would like to directly jump in and ask you some questions. Yeah? We have prepared here some little survey tool, and our IT support here, Lawrence, could you please now move towards the view so that we can see our, yes, exactly. So let's start here with the upper corner, with the very first one. I asked you the question, and I would like to please now then, once you have seen the poll, to go in and vote for the answer that deems appropriate to you. So the first one is this one up here. I asked you the question: how many percent of the Fortune Global 500 firms, so the biggest, most global firms in the world, how many percent of those have actually a foreign CEO? What do you think? Is it between somewhere 0 to 15%, 16 to 30, 35 to 40, 31 to 35, or more than 45%? Very good. We have some of those voting results coming in. I will not show you the results of your voting immediately right now. We will continue. I will show you results a little bit later. Good. Thank you very much. I think this is it for the moment. I'm sorry, Lawrence, could you please go back to our... Yeah, so this was just the first question. I opened the second question. So here, second question. Again, what is the percentage of telephone calls that cross borders? No matter what phone calls these are, it could be landline, could be online, via mobile phone or so. But how many of those calls really do cross borders? And again, I should say, this is again a global perspective, like we focus on the global Fortune 500 firms beforehand. Now we focus again on a global perspective. Is it 0 to 10%? Is it 11 to 20%? 21 to 30%? Or more than 30%? Okay. Thank you very much. And the final question, here we go. Again, I ask a question relative to cross-border flows. How many percent of regular students, I mean not exchange students, but regular enrolled students, study abroad full-time? What do you think? 0 to 10% again, 11 to 20, 21 to 30%, or more than 30%? Good. Thank you very much. I end the poll here, and let's go back to the other view. Yes, thank you very much, Lawrence. Good. These were just 3 very simple questions. There would be many other different types of questions that we can ask. They are all 3 of them. They are indicating some kind of variant of globalization, understood as cross-border flows of, for example, people, of goods, of services, of information, and so on and so forth, and capital, of course, right? When I do ask these questions, we get usually a number of different types of results, and a lot of these results are driven by a certain perspective on what globalization really is. Yeah? And there's kind of one camp that really says, we have a very, very globalized world. The guy here, the journalist Thomas Friedman, has in this very famous book called The World is Flat. Yeah, so there's no difference, there's nothing anymore between the different elements or the different countries in the world. It's totally flat. We've also seen people talk about a global village, or the fact that there's just one world now, not many different centers anymore. And also people speaking of a death of distance. Yeah? The distance that previously had been a big, big barrier to the global flow or the cross-border flow of information, capital, goods, and so on. That this death of distance is occurring now. Right? So this is one camp here. And actually, as I just said, we can ask a lot of these types of questions. I took some of those questions and the data here from a famous global strategy professor named Pankaj Gemawat, and he has produced these kind of pictures. I quickly go through here. Whatever he's doing, he's looking at trade flows across borders. He's looking at capital flow across borders, at information flows across borders, as people flows across borders. I've given you specifically this question about students and phone calls, but there's a lot more of these kind of questions that we can ask. And he did the same thing like what we've done just right now. We can ask managers, politicians, students, all kinds of people of what they think, what is the extent of cross-border flows, which means automatically international flows, as compared to purely domestic in-country flows, exports, investments, stock markets, and so on. So let's look at some of this data. Right? This is how this data looks. Phone call, for example, a very, very small percentage of our phone calls actually do cross borders every day. Facebook friends, we have lots of friends on Facebook, and potentially Facebook would enable us to get a lot of friends outside of our home country. But in reality, where are our friends? Well, most of them pretty predominantly are in our home location. That's where we study, that's where we live, that's where we have our friends, and those friends are also on Facebook. Tourists, a lot of tourism is still relatively domestic. A lot of students are studying at their home university. Stock market investments, if you look at the investment patterns, predominantly, of course, of private investors on the stock markets, where do they invest? Well, they invest at home. I'm, as a German guy, growing up in Germany, looking at what my father was doing, something that I was doing as well for 20 years ago. I thought, well, let's have an investment into Siemens and into BMW and firms like this. We did not consider investing into firms outside of the German context. Simply, it was not out of our minds. Same true for exports, outflows, and so on and so forth. So one of the key observations that we can make here is that the share of cross-border interactions in trade, capital, information, and people is still relatively low. Yes, it has grown a lot over the years, but it's still relatively low as compared to the domestic trade and capital and information and people flows. And the interesting thing here is that therefore, in science, in my field in international business, when it comes to thinking about the world, we do not look at the world as that there's absolutely no globalization happening whatsoever. No, definitely not true. There's a lot of international interactions going on, a lot of firms that cross borders. But there's also probably not total globalization going on. So if you ask scientists, between those two extremes, we would very clearly say, you know what, we are somewhere in the middle. We are not that super strongly advanced in terms of globalization. So we are not fully there where the world is flat, where there's one world, where there's global village. We're also not fully on the other side, where there's a fragmentation of nation states, or an importance of the borders across countries and so on. We are not there on the left. We are not there on the right. We are probably somewhere in the middle, right? And therefore, in science, we would never speak of globalization. Well, we would speak of globalization as a process, but when we look at the status of the world right now, we would not talk of a globalized world. We would talk of a semi-globalized world, or another term for it, we would talk about a transnational world where there's still a lot of activity at home in the local country, while there's also some activity that crosses borders. Right? So this is our scientist view. Now let's look at another thing that this famous global strategy professor has done, and that I will do as well then with you then a little bit later on, coming back then to your poll question. He has looked at these trade, capital, information, and people flows across borders versus not across borders. And I've shown to you already the correct values, the real values from the World Bank and so on, from the United Nations, lots of good sources here. And he has also done surveys. I have done also surveys with lots of different types of people, politicians, managers, and students. And the survey results are depicted here in this picture in light blue, whereas the correct results are depicted in dark blue. And no matter what the real level is, there's one thing is very clear in this picture. Can you see this immediately? What is the key thing? If you compare the light blue versus the dark blue one. It's not a very difficult question here, since the title suggests to you already what the key message is, right? The key message is, of course, that if we ask relevant people, managers, politicians, and so on, it's very, very systematic that they overestimate the status of globalization. Now, we can have a separate discussion of why this is the case. There might be lots of different reasons why this is the case, but very, very clearly, we often overestimate the status of globalization, how advanced globalization is. Yes, it has increased a lot, but it's not that advanced as we think. Yeah? So these were the two questions that I asked to you, the phone calls and the students at a foreign or a domestic university. Now, I just give you also some information here from a survey that I was running 3 years ago from a live event where we had more than 500 people joining here. How many percent of the Fortune Global 500 firms have a foreign CEO? You can see here 68% at that time overestimated globalization measured in this particular way in terms of foreign CEOs. Right? How does it look for the second question? Here, what is the percentage of telephone calls that cross borders? Here, 76% overestimated the extent of globalization. And the third one, how many percent of regular students study abroad full time? It's a very tiny percentage, actually, it's somewhere between 2 and 5%. Here, 84% overestimated of what was happening. So let's maybe now look at your results in a minute. Yes, thank you very much. And now what I will do is I will broadcast these results to you. So here we go. This is now the first picture that you should see. Please give me a quick heads up in the chat function if you can see the results, your results of the poll in the first question. Yes, great. Yeah. So what can we see? Very clearly, your perceptions are relatively similar to what we've seen in the past. For example, 3 years ago, a large percentage of you are overestimating the real number of Fortune Global 500 firms that have foreign CEOs. Sorry, we are very small here in the numbers. We are just close to the 10% mark. So the first answer A would be the correct one. So let's have a look at the second poll. Voila. Now you should be able to see the second poll as well. This was the one for the telephone calls. Yeah. Here again, very, very clearly, you're falling into the same kind of pattern. You're overestimating the extent of globalization, measured here in this case as cross-border telephone calls, communication in that sense across borders. Here we are with 100% overestimation. And let's look at the last result, how many percent of regular students study abroad full-time. Again here, very, very similar. We don't have that many people joining tonight, of course, but we have something like one person representing 12.5% here of the participants being correct. That's a very small percentage, below 10% of students who study full-time abroad, and appropriately 80 plus more percent that are studying at home. Now, what does this mean? We can go back now and leave the results of the survey. What does this mean? Well, it shows to us one actually pretty peculiar thing from my perspective, and that is, there's several points here. On the one hand, it shows that our perceptions of globalization is still very, very strongly driven by this process of globalization over the last 20, 30, 40 years, which was a clear upward trend. And despite COVID-19, despite the corona crisis, a lot of you still have the perception that the globalization level is very, very strong, very, very high. But corona might actually call this into question. We might be saying, well, is it true that we have such high levels of globalization even during now corona, and what corona was telling us, was showing us? Let me connect this a bit further to firm activity, and also to activity of firms that shows you how much they spread and how much they internationalize across different types of countries. This is a picture now in this case for Austria, but we can look at many different countries here, and it might be very interesting to look at them, to compare them. but I can tell you already the picture looks relatively similar across a lot of different types of countries. So this is merchandise imports into Austria. Austria is here in dark red, and all the other countries where the imports are coming from are highlighted, and actually the countries in this map are resized depending on how much imports are coming from this country. So if the imports would be very similar to the size of the economy where the imports are coming from, then the map would look relatively normal. However, what can we see here? Well, we can see, for example, Germany is incredibly big here on this map. It's an incredibly important import partner for Austria. The same is true for some Central Eastern European neighboring countries and Switzerland, and maybe a little bit of the Benelux countries. But what we can also see here is that India, for example, basically doesn't exist on the Austrian map. China, compared to its size, is pretty small. The US, again, compared to its actual business size, the size of the economy, is very, very small. Latin America, entire Latin America, disappears on this map, which shows to you that there's still nowadays a lot of different types of barriers for firms to internationalize their activities. Maybe they do internationalize a little bit, but if they do, where do they go? Well, to neighboring countries. Where do they go? Well, to countries where maybe there's common history, there's a joint language, maybe the same currency. This is where international business activity really thrives, where the context of these countries are relatively similar, and where a lot of institutional arrangements across these countries facilitate the international business activity, facilitate trade, facilitate flows of people, facilitate flows of capital, and facilitate flows of information. And that is apparently not given if we move too far away, such as Latin America, India, Australia, China, or even relatively seen the US. So this is just a key picture. A lot of these barriers against globalization still exist, and they persist. And this is what keeps the level of globalization relatively down. Now, we in global strategy, we usually think of this, of these differences across countries and so on. We think of those as distances, right? Not only geographic distance, we also think about this as, for example, cultural differences, or as I say, cultural distances, where we have differences between languages and religions and norms. We have distances and differences in terms of the administrative systems. We have the same political systems, the same law systems, codal law versus, for example, other law systems. We have geographic distance. We have economic distance, where there's massive differences across income levels or costs or quality of resources or accessibility of resources in a particular country, and so on and so forth. If I may say so now, if I may ask you, what do you think? What happened now during COVID-19? What happened to these different types of distances or differences? Did they change? Or did they not change? If you have some idea, just type them into the chat. Tudor Voyner says they didn't change. Perhaps he's right. I mean, if we think, for example, about cultural distances, definitely, right? The cultural distances are probably pretty much the same as beforehand. But what about some other distance dimensions? They didn't change, says Mihai, but now they are put in a different context. Difficult to understand what you mean exactly with the different context. Maybe you can specify this a little bit. There's lots of typing going on, very good. Maybe before we wait too long for the input, so from my perspective, as I said, geographic distance as such is not changing much. Cultural distance as such is not changing much. When it comes to administrative distances or differences across countries, or economic differences and distances, there it's getting actually much more interesting to think about the question: what has changed now since COVID-19? As an example, right? A lot of countries have suddenly closed their borders. And a lot of countries have suddenly had different types of regulations of how to deal with COVID. Yeah, and this was really, the border of the country is suddenly visible again. A lot of countries have closed the borders in a sense that people flows were not possible anymore. Trade flows were not possible anymore. This is very similar to a system that we had maybe 30, 40, 50 years ago, where really at the border, this was a very big hurdle, a steep hurdle to overcome, where lots of different types of processes, administrative processes were, for example, necessary, tariff processes were necessary, bureaucratic processes, in order to overcome this frontier and to move goods into the other country. In terms of economic distance, we can also think of this as, the impact of COVID-19 was and will be very different across different types of countries. So first, some countries were impacted much more than others. So Italy, for example, more impacted than Austria or Germany. Sweden, again, having a very different approach than Spain. Still Spain being very much impacted, and so on and so forth. We have lots of different types of approaches. And therefore also the economic crisis that follows the pandemic, that follows the health crisis, is very different. So if you look at different types of GDP forecasts regarding the question how much impact does COVID have on the individual countries, there's a huge difference. Just to give you the example, Romania, for example, is forecasted to still be with positive growth figures despite COVID-19, whereas a lot of European countries and the US and so on might have strongly negative GDP figures. So economically, in terms of income, in terms of costs, in terms of the type of the recession and unemployment that will follow now, strong differences across countries. And this obviously directly has impact on how you can make business in this other country, how you can cross border with your approach, with your product, with your service, or how you can source from a certain country. So by now, Mihai has responded here a little bit more in detail. The condition change culture is the same. Administrative change due to COVID-19 conditions. Yes, that's pretty much what I just said. Economic change due to COVID-19 also started to change before COVID-19, with a tendency of diminishing the dependence on Chinese production. This might be happening in some industries. It definitely did not happen in some other industries, but you're right. Some of those changes got accelerated now by COVID-19. Yes, but you're right. In essence, we said the same thing. Cultural geography distances pretty much unchanged. Administrative distances, economic distances got a huge boost. And the key point is here that suddenly now these borders become very visible and strong again. Here are some of the actual figures that I just got from a very recent Harvard Business Review paper. I hope that you can see this well. It's a little bit small, but here they show to you trade volume. This is the one here on the left. International investment flows and international travel. Again, just three simple measures that represent, our measures of globalization here. And you can see the overall development over the years, pretty much upgoing in terms of the process of globalization. But then here, these are the forecasts, an optimistic versus a pessimistic forecast based on good data, again, here from the World Trade Organization and UNCTAD and so on. huge decreases for trade, huge decreases for investment flows, and huge decreases for international travel. Actually, I was talking recently to a couple of managers from different firms, and they said one of their most important issue right now is actually the fact that they cannot do business travels anymore, or at least that this is much more difficult. So their way of handling international businesses or their own subsidiaries abroad is much more difficult than before. Actually, one other thing that you can do here with this graph, you can compare. If you look at this pessimist, optimist, somewhere level in between, you can compare how much the COVID-19 crisis is pushing us backwards in time. So here we are at the level 2020. We are roughly at the same level like in the early 2000s when it comes to travel or for investment flows. It roughly puts us back somewhere again into the pre or post millennium change era. And then we have here something where we're at least back to the 210 in terms of trade volume right after our crisis 2008, 2009. Another thing that you can observe here, by the way, is that relative to COVID-19, the 2008-2009 crisis was a joke. You can basically neglect this in terms of impact. You see here the little bump, 2008 to 9. You don't see it here really, but investment flows is always a bit more tricky measure. But you see it here in terms of international travel on a much more limited scale here. So from my perspective, summing up so far, we have always had strong barriers to globalization. Funnily as it is, most of us are overestimating, however, globalization and so underestimating these barriers. These barriers still exist, however, and now COVID-19 has made some of those barriers much stronger, especially economic distances as well as administrative distances, making the border very visible, and this has directly a key impact here. Now the question is, and it's the last thing I would like to focus on, what happens here? What is the consequence for firm strategies? Yes, there's spotlight on borders, on differences. Maybe to some extent you could say geographic distance in the sense that geographic distance becomes relevant with the borders now. But what are the consequences for firms? Now, from a strategy perspective, as I said, we don't talk about globalization, we talk about semi-globalization rather, and we have a relatively clear-cut typology of the strategies that we can use when it comes to a situation of semi-globalization. In principle, strategy is about answering the question where to compete and how to compete. And when it comes to how to compete, the three options that we usually have is we can run an aggregation strategy, which is based on standardization, harmonization, which thrives on the absence of barriers to cross-border flows. Or we can go for the opposite, an adaptation strategy where we kind of say, okay, borders exist, everything is very different across countries when we move across the borders, so we need to adapt everything that we do, our business model, our products, and so on, to the local country context. And finally, there's arbitrage strategies, which essentially says, yes, there are differences across countries, but we can, and maybe we should, profit from those differences. So based on this very simple framework, we can try to derive some thesis, some hypotheses, you could say, regarding the future of what COVID-19 will bring to firm strategy. Point number one, from my perspective, and then I'm happy to discuss this a bit more, I think firms need to rethink their aggregation strategy and reevaluate the redundancies. So here one point is, beforehand, if firms have focused strongly on standardization and efficiency through, for example, maximizing production in one particular place where it's low labor costs and so on, then this is very clearly much more dangerous right now, right? What do I mean with redundancies? Well, with redundancies, this simplistic one key supplier or one key supplier country models is clearly much more risky during times of COVID than if you have 2 or 3 or different types of suppliers, or you have different types of markets where you can source from. So in terms of aggregation strategy, given the fact that we have an increase in these barriers, well, this has to be rethought, and potentially redundancies that you might have in a system that are not that efficient might help to actually be more resilient against this kind of disruption through COVID. Interestingly, in this context, by the way, is that if you talk to procurement and supply chain managers, and I've been working in the past in the operations management team of a top management consulting firm, is that very often, if you talk to procurement or supply chain managers, they're incentivized and they're focused entirely on efficiency most of the time, right? Disruption or assurance of revenue levels through the supply chain, this is not very often on the map of those types of managers, right? And this is part of the game here. Because it's an aggregation strategy, efficiency is a key thing. And I think, if we reevaluate this, a lot of firms will come to the conclusion that, potentially some other measures here have to get into the picture. Second point, because there is the border, again, very visible and very important, I think that there will be more relevance for arbitrage strategies, not necessarily only financial arbitrage, but also other financial arbitrage strategies, where where firms try to profit from these differences across countries. For example, a very simple example of, if there is a lockdown right now, a heavy lockdown in India, why not sourcing from China instead, if China is already over the peak and has already opened up again its manufacturing base. Of course, such kind of arbitrage requires a lot of flexibility. It builds on these redundancy ideas that I was just talking about. And in principle, I think if distance increases, arbitrage strategies automatically become more important. The third point is that I think that, what are the type of firms that are totally untouched, or at least very much untouched by the disruptions that COVID-19 has brought to the cross-border flows of people, goods, capital, and so on? Well, it's domestic firms. Domestic firms with purely domestic, self-sufficient systems where they are not very much impacted by any kinds of international activity, right? Those domestic competitors can become much stronger now during COVID-19. They become actually potentially real competitors to lots of the big firms. And that means, fourth point, that lots of the big firms might consider more often than before to divest from certain countries, because they notice, if they want to invest, if they want to continue business, domestic competitors are very strong, and purely setting up entirely local islands of self-sufficient systems in a world, that doesn't make sense. They still have to finance their global overhead, their global headquarters, their global operations. So setting up just a network of lots of independent, independent firms, that doesn't make much sense, right? So they might need to divest and focus only on the most profitable businesses. And finally, because of those strategic changes, I would also forecast that there will be a couple of organizational changes following, because after all, organizational structure follows strategy. Yeah? And here, from my perspective, one of the key points, as I already said, is this feasibility or the absence of international business travel, which makes a lot of interaction with subsidiaries and subsidiary managers much more difficult, and it probably has an impact on the structure. I could also imagine that, for example, given that we have to focus more on arbitrage strategies and less on aggregation strategies, more on domestic competitors and so on, we potentially need intermediate headquarters, such as regional headquarters, to become a bit more stronger again. Yeah? So if we have these multinational corporations, and we have a strong tendency in the last years towards centralized structures and so on, here I would say clearly, regional headquarters, regional centers of decision making that are a bit closer to the markets, that are a bit better maybe in the position of understanding where sourcing and market decisions, how you could optimize these sourcing and market decisions in a bit of smaller set. This will be key also in the future. So I also think that structural changes will emerge. That's it from my side. These are my thesis, my implications of COVID-19 for international strategy of firms. Now, obviously, we could go now further into the details, and that's what we would do in class. We would go further into the details of aggregation strategies, arbitrage, domestic competition, how we can react to this, does it mean for the global supply chains, and so on. We can't do this here, but this just gives you the outline of potential next steps in an MBA setting. Now, I noticed also that you've typed in a couple of more points here into the chat. So let me get into your chat here. So Katharina is saying, although it's also a question for companies to adapt or disrupt their strategy, if I understand this correctly, and if I interpret you correctly also, I basically covered your point already. Yes, if there are these distances that do change now, well, companies have to adapt and disrupt their strategies, and change their strategy landscape here. Please, Katharina, correct me if I'm wrong and type your response. In the meantime, Mihai, right, the disruption of activity has affected almost all companies. So I think there is an increased counterparty risk for all the companies, directly affected or not, because one, the suppliers can be in difficulty and also be very important. Yes, the entire chains have been disrupted. And second, the customers can be in difficulty and not be able to pay very, very correctly. This is exactly what I meant beforehand, and then I might go back here to the slides here. This one. Economic differences, essentially it means, we now have these crises, but these crises look differently across these countries, and there might be a very heavy recession with big implications on customer ability to pay in Italy, and it might be much, much less problematic in Germany, which has just recently launched now a big recovery program by the government, where I personally predict the recession problems will be much, much better under control, right? So yes, there will be customers in different parts of the world which are very heavily impacted. Okay, so Katharina is saying, oops, I was going too far. Katharina was saying, thanks, it's clear from a perfect. Thank you very much. So Mihai, did I also understand you correctly in this context? Yeah, great. Yeah, super. Very cool. Very nice. Thank you very much for your comments. Please add some more comments if you have some further questions, and we can go in here. What I would like to finish with is, of course, we are doing this little mini lecture here to showcase how MBA teaching could work out. We are not doing this MBA teaching in this online webinar format. We are doing this also in a more interactive way than with flip charts and whiteboards and more case studies, where also you would be enabled in this situation to present to the professors, to the class, but to show to you some of the options of how you could join our programs. Let me show to you that we actually still have a lot of different types of scholarships running right now for the different programs that the VU Executive Academy is offering. Personally, I'm responsible for the program here in the middle. This is the Executive MBA program in Bucharest, where we still have also some free spots and where you could join if you're interested in, and we have merit and need-based scholarships. There's a deadline of June 30 for all those applicants who want to start the program in November. We also have professional MBA programs like the MBA in Energy Management and MBA in Finance and in Innovation Entrepreneurship MBAs, lots of different types of precisely defined MBAs with a specific focus. Also here we have merit and need-based scholarships. We have the Global Executive MBA, Here the start is not 2020, but it's in 2021. And again, some scholarships where you still have a little bit more time before you need to apply for the scholarship. Also, one very important scholarship from my perspective is that we have scholarships for entrepreneurs and also for female leaders. That might be quite interesting to you. And then there's some, smaller specific types of scholarships, such as here there's Vedomosti scholarships or renewable energy and power utilities scholarship for the energy MBA. So, in case you're interested in our MBA programs, please have a look at our website. Please have a look specifically at the website where we are posting a lot of information also about scholarships and how you can finance your MBA. There's also lots of information of how you could potentially contact your employer and, let's say, be very convincing when it comes to discussing if the employer is potentially supporting you in your learning program and your learning path. Because after all, you will come out of an MBA, you will be a very different person later on, and you will profit the firm to a great extent, and the firm profits from you being done with a great MBA program. In that case, if you're interested, please do not hesitate to contact. You can, for example, either contact me if you want to, or also Anna, who has just joined us also here on the video chat. Anna, you see the contact information here. And Anna can also talk about a profile check for MBA students, right?
Yes, exactly. We offer basically a free consultation where we take a look at your CV or your LinkedIn profile, and we can give you some feedback on whether you're a good fit for a specific program that you've asked about, or if you're somebody who might be between two programs, such as a professional MBA and an executive MBA, we can also give you feedback on where we think you might be a better fit based on your career goals in a conversation we've held. And I thought it was a great presentation, Professor Nell. I actually had a question on my own because as you might know, a lot of the business activities are moving online nowadays. And in light of COVID-19, I mean, this is probably going to be taking off at phenomenal rates. Is the technological differences between countries something that you and your research team are analyzing yet?
Yes, very clearly. The countries have a different level of readiness for digital solutions. This is very clearly the case, and this is another aspect where you can put this in the brackets in the box of economic distances. You can put it somewhere else. It doesn't really matter. It's just four relatively coarse cut boxes anyway. But yes, digital readiness differences do play a role. And of course, another thing that you've said is correct. A lot of these cross-border flows are inhibited these days, specifically trade, goods, right? People flows and so on. But information flows are by tendency, of course, much less inhibited. And we see this classically, the current example, the product Zoom. Yeah, most of you have heard of this probably and have experienced this in your work context, but Zoom, the video and online lecturing platform is growing at unprecedented speed, and it's possible because they are not so much affected by the borders that they are getting more stiffer and bigger these days. So yes, another discussion that we could have is which kind of firms or which kind of industries are impacted more than others, right? Here, in this case, I was talking much more from the perspective of bricks and mortar companies potentially, but not all what I said is irrelevant for online companies, because also online companies or internet-based companies, digitalized companies, are also very much dependent upon good flows of people, for example, in order to manage their firm, and this is hampered a lot. So also those companies will have difficulties.
And they'll also have to probably localize their content, because you did mention it's important, probably even more, to regionalize the focus of a firm, to have a regional hub that's strong instead of a stronger headquarters. And so it'd be interesting to see how online firms adapt a more regional approach based on
Exactly.
which markets they're active in.
Exactly, and they have to, again, for also what Mihai was saying, for the simple reason that maybe customers in some countries are, have a better ability to pay for digital services than others in other countries, and this might automatically mean that you have to adapt somehow your approaches.
Yes, and the questions you asked our audience the results were really surprising, that it seems to be just the case that everyone is always overestimating globalization, and a lot of our listeners today have several years of work experience, and they're all professionals in their area of expertise. But when you interview other managers, is it often the case that people are overestimating this?
It's generally the case, right? This overestimation. There's a big discussion about why this is the case. I think there are several reasons. Let me just highlight a few. So one reason is that we apparently confuse the process of globalization that has clearly, globalization has increased over the years with the status. Now, we're not there yet, but of course it has increased. Now we are confusing this one. A second reason is that I think that on both sides, on those that are very enthusiastic about globalization and then those that are very much against globalization, like, for example, ATTAC or so, right? Some of those NGOs. Both sides, I think, profit from the fact that they overestimate or they make globalization bigger than what it really is. So they've pushed this globalization debate a lot. And third, I think sometimes we are a bit we're thinking more in terms of opportunities than in terms of real life. So, for example, I made this short, example regarding Facebook. Yes, of course, in principle, Facebook, which is a born digital firm, right, would enable us to have friends everywhere, all around the world. But it is very unlikely that we really do get these friends, because where should they come from? We would not just randomly have 100,000 of Chinese friends, because there are so many of those Chinese people out there. It will simply not happen if you don't have some specific private contact or business contact to this country, right? So relatively, we will always have much less friends also on Facebook in China, talking now from an Austrian perspective, of course, here, than we would have in Germany or in France or in Switzerland. I think these are some of the reasons why we are often overestimating the extent of globalization.
Yeah, and back to the second point, I mean, some people might see some gain from saying, oh, it's everywhere. Globalization is so big. And on the other hand, I would also say that some people are just maybe overly optimistic, and they think that it's something good, that there's, on a cultural level, a lot of friendships happening, and on a business level, a lot of profit to be made, and they might be overly optimistic, in my opinion. But I'll leave it to the research to underline here the reasons. And you mentioned a map that was really interesting. If we could go back to that map, I was wondering if there's maybe a partner map to have shown the exports from Austria.
It basically looks the same. Yeah,
okay.
it doesn't look very different. I have a number of those maps available. You can also have a look at the website of this guy. There's some maps available. Some of them I think are for free. I'm not so sure, but it's always the same kind of picture. The picture is always that the relationship to another country is driven by how close is it. Is it the same language? Is it the same religion? Is it the same currency? Is it the same political system? And so on. All these similarities, or the other way around, the absence of differences and distances, will make this country bigger on this map, and the differences and the distances will shrink the other countries. Yeah. For example, one famous map here that I've seen, again, because you just asked about the IT sector, for example, right? You can look at Indian software firms, right, and where they are selling and how this map looks for them. Yeah, so the exports of Indian software firms to in some importing countries, and then you see basically just two big countries popping up, and this is UK and the US, right? Because again, here language similarities to some extent. Historical linkages, for example, based on colonialism, it's very strong links between those countries, and therefore they're very big on this map, where some other countries disappear on this map.
Well, there seems to be some potential for our MBA students who do get to travel to some of these countries during their international residencies, because I know, for instance, our executive MBA Bucharest students, they travel to the United States, and I think you go with them, if I'm not mistaken. And I mean, the connection to the US could perhaps grow for some of these participants after they meet companies there and exchange business insights and perhaps contacts. And the same goes for our other students who go to China and India, and even to this small sliver of Latin America. We send our students there as well. So I think there could be some potential.
Yes, I mean, as I said, I'm not saying that globalization doesn't exist. I'm just saying that it's a bit lower than what we think, and we always have to keep this balance in mind, that there's these drivers towards globalization, but there's also the barriers to globalization, and they're always there, they're always persisting, and we have to somehow manage both sides. And maybe what Tudor was just putting on the chat is also very important, is that we should not think that our situation here in Europe, in the EU, is kind of the role model for the rest of the world, right? We are among the most globalized in terms of cross-border activity, most globalized regions in the world, but this is very, very different in other parts of the world. The US, for example, is much, much more local, much more domestic, inward-looking than all the European countries, right? So this is a huge, huge difference, right? I was specifically taking a global view here in this little discussion. So in principle, if we would do all of this now specifically only for some individual countries such as Singapore or Netherlands, it would look a bit more global and so on. But worldwide, strongly, European model is not the standard.
Exactly, and Tudor follows up that as well. We can see some brands basically everywhere in the same brands for clothing, perfume, cars, etc. So yeah, we're perhaps very much influenced by this look that everything is the same. So there must be a lot of interaction within the EU.
Yeah. So therefore, it means if we managers if here in the EU have this perspective of borders do not matter that much and everything is the same, well, then maybe our international business decisions might work out in the European context. But from the moment that we would leave the EU, we would immediately get many more difficulties than we would assume. This is also what is often happening. That firms are underestimating the extent of problems that they get abroad. I was just recently, for example, finishing a case study, some research on Baumax. Some of you might know this firm. Is an Austrian firm that died some years ago and that got taken out of the market. It was in the do-it-yourself stores market, and Baumax was very quickly internationalizing, quite far into the Eastern European, Middle Eastern region, Turkey, Bulgaria, and so on, and being heavily hit after the financial crisis 2008 and 9, and also because of this overstretch of internationalization, which costed them too much money. They in the end filed for bankruptcy.
All right. So, I mean, to avoid this dead end, let's say, as we round off our webinar, do you have any perhaps tips for global strategies for our listeners here tonight?
Yes. So one of my key tips would really be, invest into correcting your perceptions. Yeah, you might get into a situation where you notice, wow, your perceptions of the importance of the borders or the absence of the borders and how easy it is to do business across borders, that these perceptions are not correct, and then you might have to adjust them to some extent, and this adjustment might have some implications for your firm. And in addition, second point is COVID not only had kind of this soft impact on your perceptions, it has a real impact here and there. And I outlined some of the key strategies that maybe become a bit more important versus become a bit less important in my final slides. So more arbitrage strategies, less of aggregation strategies, potential for some divestments here and there, something that we haven't seen for quite a number of years, and so on and so forth.
Thank you very much for these great practical hands-on insights. For me, it was also an eye-opener to see what I think of globalization and especially student movement across borders. And I think it was great for our listeners as well. And dear listeners, thank you for your active questions. Makes our job a lot of fun. Thank you as well to our IT support in the background for making this event run smoothly. And last but not least, of course, thank you, Professor Philip Nell, for joining us this evening and sharing with us some of your research results.
Yeah, great. And I just maybe do it like this. If you still have some further questions, then write me an email. This is here in the chat, my email address. If you have some further questions regarding global strategy or the executive MBA program in Bucharest and so on, please feel free and contact me. Otherwise, thank you very much for joining us, for joining me. Thank you for the quite interactive session, despite the fact that we have to do all of this online and not in a cool, nice modern classroom here at VU. And potentially see you one day at VU again in one of our programs. Thanks a lot. Bye-bye.